Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, October 18th, 2023. As always, we'll start with our executive summary from our leadoff morning note. If you want to see the analysis supporting these conclusions or what to do about these conclusions in your portfolio, obviously you need to be a client of 42 Macro. So we'll start with number one. The Israel-Hamas conflict is rapidly devolving due to yesterday's horrific hospital explosion that killed 200 in Gaza. Both sides are pointing the finger at the opposition for blame. Following the blast, the leaders of Egypt, Jordan, and the Palestinian Authority canceled a summit with President Biden, increasing the odds of regional escalation. Worse, Iran has stepped up rhetoric against Israel, calling for all Arab nations to boycott the Jewish state with an oil embargo to boot. Number two, last Monday with Brent crude oil trading at $88 a barrel, we wrote Brent crude oil was up 4% today to 88, which may be the start of an ascent back to the mid-90s or higher after the recent sharp correction unwound some of the crowded positioning. For crude to rally well into the $100 plus barrel range, investors likely need to see the conflict evolve into a proxy war between the U.S. and Iran, which has denied involvement thus far. A recovery back to the mid-90s seems likely regardless, and that's what we got thus far. So kudos to discretionary investors among you that took advantage of that obvious mispricing in financial markets. We presented long USO calls as a portfolio hedge in our options overlay product back in mid-August and reiterate those sentiments today. Lastly, Chinese GDP needs to grow a mere 4.4% in Q4 for Beijing to hit its growth target. That seems highly likely and reduces the probability of Beijing supplying meaningful fiscal and monetary stimulus in Q4. Transitioning to our cross-asset performance monitor here in my Bloomberg. We'll start with U.S. equity. So more or less flat week over week in terms of SPY, plus 0.3%. That plus 0.3% is being dragged higher by energy, up 2.7%, followed by utilities up 1.9%. In terms of equity factors, pretty limited dispersion amongst equity factors. Everyone kind of in this 0.3 to minus 0.3 range. High beta is the laggard there. In terms of geographic performance, SPY up 0.3%. It's now starting to get a little bit of a laggard across some of the global equity markets. So FXI, China minus 1.6%, Eurozone minus 1.2%. You got Australia and Japan down about 70 basis points a piece week over week. In terms of fixed income, we're back to the net. We're back moving down. In terms of fixed income, so the core ag is minus 1.2%. That minus 1.2% is being dragged lower by mortgage-backed securities, minus 1.7%, and TLT minus 1.6%. In terms of currencies, the dollar and Swiss franc are up 0.5% a piece. You got the Aussie dollar kind of dragging on global currencies or lagging in the global currency market, minus 1%. British pound and the Japanese yen down about 80 basis points a piece. And then transitioning to commodities here, we have the broad basket up 2%, the DBC being led higher by precious metals up 3.8%, and crude oil up 2.7%. And then lastly, crypto, you got Bitcoin up 6% on a week over week basis, benefiting still from that, the fake news BlackRock ETF pump. Solana leading all crypto up nearly 9% week over week. The rest of crypto is kind of more or less flat, with the exception of Binance Coin. And so transitioning to my Longbow dashboard here this morning, nothing really to call out from the perspective of the trading ranges in terms of being overbought, oversold. So we'll leave you with some levels for the S&P here to get your day started. Kind of in the middle of the range there. You got downside to 42.80, upside to 45.02 right there. So we'll wrap it up. Darius Dale presenting our macro minute for Wednesday, October 18th, 2023. Best of luck out there today. We'll catch you back here tomorrow. Cheers.